Uh, So good evening, ladies and gentlemen, and good afternoon to some people, depending on your location. So today's webinar is on a subject which is, I think, is very important for all of us. Whether we agree or not, climate change is here. I think we all agree that climate change is here. We may have differences in opinion in terms of its scale. Now, there are various reasons for this. I'm not going to go into the details of them, but my point is, and there are also solutions. But what is still not clear is how we're going to reach those solutions. And there, as we all know, and this debate is bit historic as well, that funding is a problem, is an issue. Nobody is quite sure about what would be the scale of funding and what would be the sources of funding. But a positive thing is, silver lining is that the last COP, it was decided that there is going to be a loss and damage fund. We don't know yet more fully what would be the coverage, scope, etc. Most importantly, how are you going to get funding for that? So the name of that fund is Loss and Damage Fund, but we don't know how it is going to be funded. That's one. Secondly, what would be the governance of that? So several questions are there. Now, given those questions, we thought that this approach of having an universal financial transaction tax, which is again, the concept is not new, as most of us would know. This is there since early 1970s, when Professor Tobin advocated for some tax on minimal amount of tax on financial transactions, known as Tobin tax. So we looked at that concept and we found that even a minimal tax of that nature on financial transactions can generate $400 billion a year. I don't know whether this amount is good or bad in terms of loss and damage fund in particular, to mitigate the impact of climate change or to adapt to climate change. But at least we have a figure. I mean, this figure can also be challenged. Not saying that this is cast in stone. So keeping all these things in mind, we have also come out with a policy brief on this subject, and we have calculated a draft of that. Other than, we also decided to run a campaign, a global campaign on climate finance, keeping a universal financial tax in mind. Well, we have just started that campaign, but we have received some feedback of that. For example, we have received both for and against feedback. Bruce Stokes, who is a non-resident fellow at the German Marshall Fund in the US, he thinks that this is a painless way to raise some of the massive amount of money needed to deal with climate change. On the other hand, we have Andrew Sapir, from senior fellow in Bruegel, that while he supports the idea, but he thinks that the creation of a global FTT would result in a dead end rather than the necessary resources to finance the fund and the other forms of financial support. So opinion is divided, which is quite natural. So on that note, we have during this webinar, and this is just the beginning of our push for a global fund or loss and damage fund to give more teeth or more focus on into that fund with some kind of financial transaction. So I think we have both for and against this idea, which is good to have that debate. So we have can have factuals as well as counterfactuals on the table. And then maybe uh, less difficult for our policymakers to take certain decisions going forward. So we have an excellent panel this evening today. And before I go to Dr. Nagesh Kumar, who is the Director and Chief Executive of the Institute for Studies in Industrial Development. And we have also tried to formulate some questions for all of you. Let me also say that we're doing this webinar on the eve of the Earth Day. So tomorrow is the Earth Day. We're going to see a lot of noise, for good or bad, a lot of tweets and other things. But what actually, we know the problem, we know the possible solution, but how to reach that solution, that is something which is still a black box to many of us, or rather most of us. One possible solution is loss and damage fund, but what would be the funding of that? Sources of funding. So that's one of the key areas of interventions, in our opinion, on this subject. So with that, let me now request Dr. Kumar for the question before him is about examining the feasibility of such a mechanism, of implementation of such a mechanism at the global level. What could be possible alternatives that we can think of than universal financial test? I hope that Dr. Kumar is comfortable with this question.
Yes.
And let's hear his views in
yes
2 to 8 minutes. We have an excellent panel. We have limited time. So I am requesting all panelists to stick to their views on questions, specific questions, and speak for 7-8 minutes at the max. We'll have another round of deliberations following that. So what do you, Dr. Kumar?
Thank you, Bipul. And first of all, let me compliment Cuts, as usual, for doing something very timely. And as the momentum for G20 summit in New Delhi is building up, this is something which we should be all discussing because of the context that one is living in, that there is a staggering requirement of resources, which unfortunately the existing systems in place are not able to deliver. And, so there are estimates of staggering, resources that are needed to deliver the 2030 agenda and the climate finance. So there are a variety of estimates, but all running into trillions of dollars. And then the other, important point to be noted is that international community has found it difficult to deliver on any of these commitments, beginning with the 0.7% of GNI of ODA, which has been discussed since 1970s. And then Copenhagen commitment of 2009 of $100 billion in climate finance per year. So all of these have been found challenging. And in the current context of budgetary squeeze or fiscal constraints in every government, every country around the world, how one would mobilize this additional $1 trillion kind of resources per year for meeting the challenges before us. So in that context, this proposal, which was initially made by John Tobin, as you have mentioned, Bipul, in the way back in 1970s for moderating the volatility of capital flows, short-term capital flows. But over time, it has become more important, objective or more important objective of this could be generating the resources which do not come from the budgets, and hurt no one, but they are available for the delivery or implementation of climate action. So in 2009 G20 summit, it was immediately after the Lehman Brothers collapse. Bill Gates proposed it to the leaders. At that time also, the primary objective of this proposal was to moderate the volatility. But over time, and that time, of course, the G20 leaders, they started to discuss it. But in 2011, in the Cannes summit, despite the strong support by President Sarkozy and all other European leaders, it was pushed back and was not carried forward. So since then, it has been on the back burner. But I think it is a time to revive it on the agenda of G20, especially for its resource generation potential. And I have recently, been making some projections, some simulations on what it could deliver. You mentioned $400 billion, but my calculations of just 5%, or sorry, 0.05%, which is 5 basis points kind of a test, which is highly, marginal kind of tax, would generate at least $650 billion worth of revenue every year with very conservative, assumptions. And that is something which is 3.5 times the current levels of ODA. So this could be something which will be coming as a very big shot in arm for developing country governments, which are struggling to find resources to implement the net zero targets and the SDGs and whatnot. So I think that is where we are. And now the issue is that how do you go about it? I think it would be great if at this G20 summit, and we have actually, myself and my collaborator, Kevin Gallagher of Boston University Global Development Center, Global Development Policy Center, we have written a policy brief for Think 20, and we have proposed a roadmap that, it goes into the finance track of the G20, put on the agenda. And of course, in such a short period between now and the summit, we can't expect to have a decision on it. But at least it goes on the agenda. Some working group or expert group can look into the possibilities of implementing it, how, what modalities, what is the scope and coverage, and then the forthcoming summits in Brazil or South Africa can take a final call. So I think the way forward is very clear. I believe that it is a low-hanging fruit because over time, a lot of work has been done on this, its potential, its value, its relevance. And currently, in the context of the high, estimates of or requirements of finance for meeting the SDG agenda and climate action, this could not be overemphasized. The importance of value of this, tax cannot be overemphasized. And we should not lose sight of the fact that it would also help in moderating the short-term capital flows, which have become a very big source of boom-bust cycles in the world economy. And you remember 2013, when India, along with other emerging markets, were put as fragile 5 economies. And again, we have, since last year, when the Fed started to taper the monetary policy or e.g. money policy, we have seen highly volatile situation in many stock markets and capital markets. So I think this is something very important. I'm very happy that Cuts is running a campaign in support of this, and all of us need to throw our weight behind this campaign to make it happen. Thank you very much.
Thank you, Dr. Kumar, and particularly for bringing this G20 dimension into this debate. I completely agree with you that G20 has a major role to play. So without getting into the details, that's and we are very keen to read your policy brief for under the T20 initiative. The only thing is that since you have to leave early, if I may,
Yes,
but
yes. I have to leave right after. Yes.
yes,
Yeah.
if I may pose a
So
question
what I
to
can
you,
do is to, sure.
I mean, I'm not sure that why you are calling it a low-hanging fruit. Uh, uh, since you have also given us this history
Yeah.
of not adhering to commitments, because these commitments are not legally bound,
Yeah.
unlike WTO commitments. So
Right.
in that sense, I think we have to really struggle hard to
Yeah.
see to it that these commitments are
Met.
adhered.
Yeah. Yeah. No, my simple point why I think it is a low-hanging fruit and different from the previous commitments, because previous commitments were to come from the treasury or the budgets of developed countries. This will come from the speculators. And so there is no issue. Once there is a political will, it is implemented, and IMF or BIS is given the mandate to collect, because all these transactions go through electronic means. So every transaction happening and some cents are dropped, in the treasury. So that is how it is very simple, low-hanging fruit, not dependent on any finance minister's whims or approvals, and it comes automatically. Only thing is there has to be a global consensus to implement it, and then we are ready. And lot of work analysis had been done, including by many very senior and renowned economists, and they have thrown their weight behind over time. So in the process of writing this policy brief for T20, I happened to read some of the statements made by very renowned economists and Nobel laureate and all that over time. And so it's something which is waiting to be plucked. And I hope it happens. This momentum you are building up to leads to something. So thank you once again.
Thank you, Dr. Kumar. I mean, this is very clear now after the way you have explained it. I mean, the role somebody has to be given the responsibility of collecting, and then somebody has to be given the responsibility of governing. And that brings me to Professor Ashima Goyal. He's an emeritus professor at the Indira Gandhi Institute of Development Research in Mumbai. And in fact, her question is about this global framework. So, Professor Goyal, what kind of a global framework that you would suggest, you would propose for the governance of climate finance? Over to Professor Goyal.
Yeah, thank you, Bipul. Thank you, Kats, for the invitation. Congratulations on your recognition and this putting together a very timely webinar. So, I was asked about one of the issues in TF5 we are really looking at is repurposing the global financial architecture to make it fit for purpose. In the sense there are pressing needs, as we've all heard just now, our earlier speakers, but finances are really minuscule. So while the debate and the work so far in the immediate past few years has really focused on the MDPs, that they don't use their capital efficiently, that if they take account of the fact that they have a preferred creditor status, their costs are some 14 times lower. If they bring in callable capital and so on, they could really lend much more, that they need to focus more on getting private finance come in. And the third most important thing, I think, is the concept of layering, that they cannot, these 7, 8 MDPs cannot do everything themselves, sitting in Washington, most of them. So you have to integrate with the regional and even national development banks. And here, I think you need many kind of improvements in coordination. and governance, because even if you talk of a Tobin tax or something, or a FTT, and all that money, the current institutions, the governance is not adequate. There are all sorts of, there's dominance by certain countries. And who could really manage these funds? I think earlier the issue of a Tobin tax got stuck on that each country has a sovereign right to tax. So who is going to tax this? And among the current institutions, I think the BIS is the most maybe we could consider setting up some committee of experts under G20, which oversees this, where each country raises taxes and then it goes to the BIS and they distribute according to some formula. Because the other issue is that there is so much polarization and mistrust among some of the major countries in G20 that it can easily become politicized and it won't progress. So you need some kind of, perhaps a formula that is agreed on that could be used. So when we come to this bringing private finance, come back to bringing private finance in, then one major issue is that for emerging markets, it's about 4 times more expensive, the loans that are available. So one suggestion is to use philanthropic capital and different kinds of hedging, etc., pooling, insurance to reduce costs. But if an FTT or an IFTT was to be collected, then that becomes a large pool of funds which could be used for this purpose also. And I think I want to briefly touch upon the major kind of blocks to you, because I don't agree with Nagesh that it is low-hanging fruit. In one sense, it is that technology has progressed so much, it's easier to implement. Many countries already have a FTT. But I think the big advanced countries have to be on board. The US especially has to be on board. And one argument that could be used, they are very keen on this MDB reform, I think because partly these institutions, they want to make, it is a kind of questionable matter that they've not been able to meet their commitments of finance. So, but after all this, the spending for the pandemic and the rise in deficits, it's very difficult to tax more. But one of the issues over the last decade, starting with the global financial flows, has been there have been enormous cross-border spillovers of quantitative easing, monetary policy easing, etc. And also because there's been very little prudential regulation. I have with a student policy brief for this TFI where we look at the structure of prudential regulation. And this has been undertaken much more in emerging markets than in the advanced economies, and very little in the major source countries. So you see that there was much more done on banks. So the cross-border flows from banks have reduced, but there are other kinds of fixed income flows and non-bank financial intermediaries which are now responsible. So it would follow that if you tax one part of the financial sector, there will be arbitrage to the other part. And this is responsible for a lot of volatility, the risk on, risk off, that raises volatility and therefore costs of borrowing for emerging markets. So I think the argument should focus, and you see major academics in the US who say that monetary policy has to focus on domestic needs. That is its mandate. But you can have coordination on prudential regulation. But it hasn't happened. And the reason is very strong domestic financial lobbies. Even Janet Yellen has spoke recently at a seminar, at a webinar with Paul Krugman. She was saying that she wanted more sort of universal taxes, margin payments, and so on. But she says it didn't happen, and we don't have adequate tools to reduce risk-taking by non-bank financial institutions and so on. And in the US, this lobby is so strong that even the prudential, the capital requirements on banks was reduced for small banks. And we saw that SVB happened. So I think a very strong argument to persuade these countries to come on board is that you need some universal tax on the financial sector in order to reduce arbitrage, which creates volatility, and to reduce, And one way to, it's like, in India, we used to say that we don't need the IMF funds, but we need IMF conditionality, to force certain reforms through in the country, which otherwise there's a lot of resistance. So, if there is a global agreement and you start with some small sort of transaction tax, it could be only on international transactions first. But if it goes through and if it is shown to work smoothly and the structures to manage it and to use the funds in a way that it's not wasted, it's used for, and there's some monitoring and so on, then after that, one can go towards better, more universal taxes, counter-cyclical, better prudential regulation, which will reduce the kind of volatility that emerging markets have faced. So I think I'll stop there for now.
Thank you. Thank you, Professor Goyal. I have a question for you. And this may be slightly provocative. You see that you know it very well, much better than me at least. After the Lehman Brothers crisis, this financial crisis in 2009 and 2010, there is a demand, there is a proposal for this kind of financial transaction tax. And there is support for that by many top-class academics, including from the US. People like Jeffrey Sachs, Joseph Stiglitz, Ajun Chong, all of them supported that. But why do you think that they're quiet at the moment? Is there any reason for that?
Well, I just mentioned the very strong financial lobby in the US and elsewhere in the source countries. The belief in that regulation is always behind, that it raises costs. Even emerging markets did not push for this because they were told that it will raise your cost of borrowing. But what this policy brief, what research, a lot of research, we refer to some of it in this brief, shows is that this increases volatility. And the last 2 decades, we see that volatility has really been high. Risk on, risk off, it's affected emerging markets. Just recently, we've been going through this dollar strengthening and all currencies weakening, right? And this actually raises costs of borrowing for emerging markets. A major reason why interest costs are higher is because of exchange rate volatility and the fear that there'll be a crisis and a sharp depreciation of domestic currencies, right? So I think the lessons, the reasons that the tighter regulation on banks was adopted after the global financial crisis was that they saw that their own financial sector was impacted and their own growth was impacted and so on. Now they are seeing that there are spillovers. See, the prudential regulations are much tighter in emerging markets. We have not seen a collapse of the financial sector and financial crisis in emerging markets despite all this volatility. People are saying that things are much better managed here. So one reason is this more broad-based regulation. So if they become convinced that it is in their own interest, that it will reduce the kind of fault lines we have seen in SVB and so on, and it will make them a good cop, which will improve their reputation. They have to retain dollar dominance. They have to do something. It can't go on like this. Otherwise, countries will sort of look for alternatives. Because how much volatility and spillovers can you absorb, right? So absolutely. I think there might be opening for some more responsible policy making. Because
Let us see that. So it's very clear from your speech that while the cost of imposing such a tax is not going to be that high, but cost of not imposing its spillover effects or the subsequent effects, that's very high. We have to keep that in mind. So thank you very much for explaining this. And I'm going to request Professor Gangopadhyay to speak more on some of these things. But before that, let me come to Neha Kumar. She is the head of South Asia Program, Climate Bonds Initiative. Neha, I have a couple of questions for you. Very simple. Not just what is written in our list of questions. Neha, as a simple retail investor who has some surplus cash or surplus money, why am I not investing in climate bonds? That's my question. Am I not going to get better return as compared to, say, arbitrage fund or debt fund or such. I'm not even going into the equity, but am I not going to get better return from arbitrage fund or debt funds? And more importantly, perhaps, why my investment advisor is not telling me that, look, there is this option and you can explore that option. So why is it so? So what's your experience, Neha? Over to you.
Bipul. I'm also sitting in a conference area, so if there is some noise in the background, so excuse me for that. I think part of the answer to your question is in your question itself. I think the fact that some category of savers and investors are not yet into this domain. Primarily, it is, for at least to my mind, is for two reasons. One is that a lot of climate finance or climate investment harbors on the fact that the institutional funds, investors, they are more risk averse, and they have the patient capital, and they can put their money for where the large upfront costs are required, and longer sort of investment tenures can be borne. And why this is important is because most of these investments are of that nature. So if you're looking at whether that is renewable energy, or whether that is in the areas of transitioning transport sector for being more electrified, or even if it is for adaptation, right? So the tenure or the time gestation and the time period within which some of these investments actually for which they are needed is much longer. So that is why the institutional investor class is basically preferred, because they have large pools of money and they can shift capital at scale. So that's one. The second thing is, of course, the awareness levels are dismally low. Now, retail is something which is, it comes at the sort of the tail end of people who till now have not been really aggressively pursued by anybody. But just to give you an example, which is from our own country, which is actually the Indore municipal issuance of a green bond, they opened it up, Bipul, to all categories of investors, from high net worth individuals to retail to institutional. And believe me, it was nearly six times oversubscribed. And a lot of retail investors actually participated in that. It ran like, it ran really like an IPL match. It was a very, very successful issuance coming from, you can imagine, a municipal body, So if you were to really take the example of and just a little bit more on this particular thing, because I think it will give us a point of view of what happens when you are trying to tap retail investors. A lot more work requires to be done. Yes, there is awareness amongst some retail investors that if there is something green, if there is something which is for the larger sort of public good, whether that is better air or better water bodies or whatever, then they do feel that they can invest. But in which kind of investment they are putting their money, I think they will be a lot more sort of cagey about a private sort of a body coming out rather than a government body coming out and asking. By the way, it is not only Indore, it was also the sovereign green bond that was raised by India and the government. That was also open to retail investors, and many people who know about these things actually invested. But yes, the point is well taken that for any of this kind of attempt to become, say, mainstream, a lot more effort needs to be done. And that means that the processes and the systems take a lot more time and perhaps become a little more expensive for such kind of investments to actually tap a base which is very, very fledgling. to put it very simply. Yeah, so that is my answer to the question, at least in the way that I understand it, but it may not be the complete answer. But definitely what I'm seeing is that it is the benefits are not known. The systems and the processes require more time, both material as well as, system-wise. But it is possible. And just a third point on this, because you touch a very interesting point. Actually, for countries like India, where there is that large retail investor base, if you were to do it like this, you would perhaps be able to, procure a lot of capital domestically. You don't even have to go abroad and, get into this currency mismatch and volatility and external debt traps, etc., etc. So I think it's a very important point, but it is definitely not, harnessed, or even the attempt has been a little bit. I think it's coming, but it will require a much more. It will require incentives, no doubt about it. I think if you know, like the green deposit scheme, which has just been announced by the Reserve Bank of India, this is a retail scheme. This is a retail deposit scheme, and they are saying that if you put your these green deposits, and all the proceeds will go to sustainable activities. And again, the question of credibility, governance, verification, allocation of proceeds will be important to do this. But again, when we said, okay, will this succeed or not? Then one view says that you need more incentives, and the other one says it is a starting point, and perhaps it takes time but you have to start at some place.
Thank you, Neha. You have answered another question which was coming to my mind, and that question is, after hearing all this, I mean, not today's webinar, the question which was coming to my mind was that is there a business case on the climate economy? I think you have answered that question as well with examples that yes, there is a business case, but I think we need to do more to talk about it, to popularize it particularly among the skeptics. With that, let me now come to Professor Shubhashis Gangopadhyay, Managing Trustee and Research Director, India Development Foundation. I have a couple of questions before you. One is that how do we get, I mean, it's easy to talk to those who have already converted. How do we get those who are not yet converted to this cause onto our side? That's more of a political question. Secondly, do you think that even a tiny amount of this kind of a tax, which is not imposed on firms, but on financial transactions, from your experience, I know that you have been doing a lot of work for so many decades on finance. Is it going to cause much disruption in our system? Because that question is also being raised. So over to you, sir.
Thank you, Bipul. Just two observations. One is it's not fair that you should say in public that I have had long decades of work.
I know that.
It just gives out my age. It's not a good thing to do. The second observation that I want to make is that what I was given as a question is in no way connected to the two questions you asked.
Yeah, well, I tweaked it.
You tweaked mine also.
You know, Miss Vasida, I love tweaking things.
We're all being tweaked.
We're all being tweaked, yes.
Yes.
Very clear.
So, but let me raise something that Neha said. There is a lot to learn from what she said. That she did say, especially given your first question, right? That how do we get the non-converted converted? Now, the important thing to understand is that investors will go in where there is value. The real problem with climate and all of that is that it's an externality. And so the extraction of value is an issue. And that is the reason why we need collective action to be able to generate that value and distribute it, right? And that is what Neha probably meant when she talked about the credibility. The municipal bonds, RBI, right? People are convinced that this value will be generated. And therefore, they will not stand to lose. So, and I do believe that the local effects of climate change are more, are affecting more the developing countries, right? Because they're already vulnerable. And therefore, any, especially in agricultural patterns, rain, weather, right? This has huge implications for those who are vulnerable. And therefore, connecting it to those vulnerabilities will get many of the non-converted converted, because many of the non-converted is because they are not sure that they will benefit from this. They will pay up, but whether they will benefit from this or not. And that is where collective action, credibility, and all these issues come up. So that's a very good point, actually, that Neha made, because this cannot be solved through the marketplace. That is for sure, right? So there has to be some non-market intervention to make this process work. So that is a major thing that I would say about winning over the non-converted. Now, given this long decade, I'm extremely forgetful. So what exactly was the second question?
Is it going to create a lot of disruption in the system?
Oh,
the
yes.
financial system?
Indeed. You see, one of the things that we would need, and I'm going to go back to the question that was supposed to have been asked, because that gives me an opening for what I'm going to say. I was asked if the harmonization would be an issue, because if you're trying to create an FTT across the border, across countries, to create a global fund, then the issue would obviously be, how do we harmonize the FTT, right? And the reason why it directly answers your second question is because we have to keep in mind, and this is because you started today's program by referring to Tobin. Now, the Tobin tax was not meant for revenue raising. It was suggested, it was just a suggestion, not employed though. It was a suggestion to maintain the volatility in financial markets, or to curb the volatility of brought about by speculators, right? So it was to reduce speculative activity. Revenue was never the objective. And but we are today talking about the FTT, and your calculations that you said, and what Nagesh said was essentially to generate revenue for the fund. Now, the empirical evidence that we have on harmonization is in the EU. Not for the climate fund. The EU was trying to get its member countries to have a uniform FTT for a very long time, and it has failed. So now imagine doing this across the globe. And as has been pointed out by Ashima, taxing is a sovereign right of the state. Right? So the reason why this harmonization has not happened in the EU is because of this, because countries want to maintain control over their taxation policy, taxation rates, where they will put taxes, etc. So now let's come to the economic part of it. Almost all economics tells you that intermediate activities should not be taxed. And financial markets provide intermediate activities. And that's the reason why we could also not have a value-added tax, for example, in finance, because it's very difficult to figure out what is the value addition. And probably that's the reason why we are even talking about an FTT, because that is easily measurable. Right? But we know that the fact that it is easily measurable does not mean it's the right thing to do. So the enforceability problem is much lower, but it severely affects the real economy. And this is where the problem starts. Because the real economy in different countries are in different states. So the impact of a financial transaction tax will be different across countries. And that's why the harmonization is difficult. So nobody is questioning whether a fund should be created. As I said, this cannot be solved by the market. Climate change, does not respect boundaries across countries. Therefore, there has to be a global collective action on this. And obviously, a fund is a good way to start, right? Because since it's an economic problem, it requires resources, so it's good to have those resources. But is this the best way? There is, the literature is extremely fuzzy because it's very difficult to figure out what the incidence of a transaction tax would be in financial markets. No economist has been able to put a finger on it as of now. Right? There are some analysis that has been done, very country specific, very context specific. But given the context, the problem is that when you have a transaction tax, since it's an intermediate activity, you don't know how the economic activities are going to change. So the new normal, you don't know what will happen. And there are too many possibilities. And that's why economists have not been able to come to any decision as to what would be the impact of the FTT, or any FTT for that matter, even within their economies. Forget about a harmonized FTT. Why? Because again, it was mentioned a little while ago, financial markets are full of arbitrage possibilities. You touch one aspect, there'll be changes in other aspects of the financial market, right? And therefore, for financial market regulation, the usual approach that we take is functional regulation, not activity regulation. So of course, what you're talking about is all financial transactions, but certainly you're not going to implement all financial transactions. For example, lending, I don't think you're going to have a transaction tax on that. House mortgages, I don't think you're going to have a transaction tax on that, right? So the same financial market will have different parts which are being taxed and other parts which are not being taxed. And that's what financial markets are so difficult to regulate, right? Because you can generate other assets, right? Which will be similar to any portfolio you're trying to control. And that's why people talk about functional regulation, right? Rather than activity regulation. So these are all the issues with FTT. Okay. So to sum up, it's not revenue. There is no literature on its revenue generation capabilities. There is a lot of doubt on how it will affect the real economy. And third, very difficult to think how to harmonize, right, across countries. Because the little experience that we have, even for a small group of member countries, the EU was unable to do it. For many, many years, at least 7-8 years, they've been trying. I'll stop.
Thank you. I mean, these are important points that we need to take into account, and also lessons, as you have mentioned, the EU experience. But the need for, I'll come back to you on this point, that how are we going to then finance this loss and damage fund, which is already a commitment made at the last COP. So that is something I'll come to the next round. Let me now come to Mumbi Wachira. She is a lecturer at Strathmore University, Nairobi. Mumbi, the question before you is that how do you see the role of African countries, including these developed countries, and possible role of agencies like UNEP, United Nations Environment Program, in the context of climate finance, particularly loss and damage fund? Over to you.
Thank you so much, and it's really an honor to be here. I think I'm just going to give some contextual relevance so that people also, in case they don't know, just appreciate where we're coming from. So for us here in Africa, you know, between 2020 and 2030, we need an estimated amount of $2.8 trillion, okay, to deal with climate change challenges. That looks like 250 billion a year. So on an annual basis, what the average has been is about 30 billion, okay, which is like 12%. When I look at the countries which are most vulnerable, because we also talk about vulnerability, actually the president of the Africa Development Bank, recently he said 9 out of 10 of the countries which are in sub-Saharan Africa are actually most vulnerable to the worst effect of climate change. So I think for us, and I'll get to the role of UNEP, but I think for us, what I've seen is there's a lot of effort in some countries like Kenya to try and start acting nationally in a small way because of the difficulties sometimes that we have in accessing international financial instruments. So the first thing is the government has actually created a draft green incentives policy, and it just identifies what the priorities are in terms of decarbonization, and therefore what are the fiscal policies and spending aligned with those particular areas. So whether it is blue economy, whether it's agriculture, they really go through the different sectors and they provide the proposed incentives on the same. The other thing that we've realized is that we need to mobilize the local financial institutions. So it's interesting because in Kenya, for example, the professional network of bankers, we call them Kenya Bankers Association, is actually the body which for the last 7 to 8 years has been driving sustainable finance principles across the country. And then what we've then had in the last 2 years is a central bank introducing a legal framework for banks and other institutions to actually align with the task force for climate disclosures. So these are just locally led initiatives, but it's really just to spur action because we've seen that we're really having a challenge with access. Okay, and that is even what the question was about, yeah? Because really what we sometimes, or not even sometimes find, what we've been seeing is that most of the climate finance for Africa, more than 50% of it is through debt. We're already heavily indebted. Our economies are struggling. So you can imagine now what this extra load therefore does. So this is why this idea of a universal financial transactions tax is somewhat attractive for us because we see the deficit. Now, where does UNEP come in? So it's interesting because, we had them in a research discussion, coincidentally, today is Friday, it was actually yesterday. And we were asking them, where are we when it comes to the data on our nationally determined contributions? Okay, so we have a national body that's supposed to be collating all of this, but the reporting is quite poor. So we have been then asking, how do we then, in collaboration with the UNEP, perhaps just scale up and centralize climate-related data? Because a lot of the problems with access is the data quality around different types of projects and initiatives. So the first question is, how do we then work with UNEP? I'll also just acknowledge that because they are headquartered here, actually, there are several projects that they are implementing in collaboration with several institutions, and we're actually seeing their impact. But then we're also seeing that this is taking quite a long time. So there's need for, therefore, rapid scalability across different parts of the country, let alone even the region. The other thing that I think they could be very useful with is just helping us to build capacity with adaptation risk analysis. You find that by the technical capacity, especially at a sub-national level, or as we call it here, county government level, it's really low. So how do we then, take that, the more or less the technical skills that they have, working in collaboration with other institutions, even academic ones, just to bring that down into the sub-national levels, and to the communities who actually are the ones that sometimes are given, responsibility over some of these projects. And then the final thing I'd just like to add is, in line with that, I've also seen, because of having a very young population, having a lot of challenges, there's a lot of entrepreneurial spirit that we see in our context, and this spurs innovation. So I've also seen a lot of innovation around financial models that can support the people who are struggling the most. So there are different businesses, such as there's one we call M-Copper, which provides solar power products to people who really don't have access to energy. In Africa, actually, I think over 600 million people do not have access to energy. So they make it affordable, and yet they have solved their problem. And the financing model is really quite interesting. I would encourage people to read about them if they don't know them yet. So this is more or less what I see, that we've started turning to ourselves more to start solving the problem, even though we know we are nowhere near close to reaching the financing limit, or rather requirement, actually, that we actually need to support our economies.
Thank you, Mumbi. I mean, the last point that you have made about this entrepreneurial spirit, particularly young entrepreneurs, and that's I think is a very, very positive point. That while challenges are there, but at the same time, we are many of us countries with young population, entrepreneurial spirit is very much there. The question of regulations, then of course will come into play. Different kind of regulations, but and I'm going to come to those at that point in the next round of our discussion. So let me now come to Abdul. He's a tax expert. He is a senior program officer of South Center. He's working on taxation issues. So Abdul, after hearing all these things, and the question which was posed to you, that how could this idea be integrated as a key agenda of G20? Nagesh, I think he has partially answered that question, that it should be, but the more important point in my opinion, given this diversity or given these differences within G20, not just because of recent happenings, but historically it is there. How you see the role of countries like India, Brazil, South Africa? It's a coincidence maybe, but sequential, that this year, next year, and next to next year, we have this G20 presidency from three major countries in the global south. Some of them are also calling them global middle for various reasons. But how do you see this? How can we make it a major agenda item of G20? Not just this year, definitely. It's not an issue which can be done overnight, but as a long-term or as a medium-term at least issue, major agenda item. So over to you, Abdul.
Thank you, Bipul, and to Cuts International for this invitation. And it's really a very timely topic. I hope you can all hear me.
Yes, yes.
The use of the term tax is, as Ashima Goyal madam and Professor Gangopadhyay had said, this is a very sovereign function. But whereas here, the objective is really that countries are acting as intermediaries who are basically going to collect the money and then give it over to a central agency, which is different from when we say a tax, which is that the country collects the money and keeps it with itself. Also, the idea here is that this would go into the loss and damages fund, which would then be used for adaptation projects. So in a sense, the fact that this is tied to an item of expenditure, this could be called as a cess more precisely, rather than a tax, which is typically not tied to expenditure. The key precondition for this idea is that countries agree to give up their taxing right and agree to act as mere collecting agencies for the common pool. And as Professor Gangopadhyay had said, this is the main reason why the EU's proposal failed to take off the ground, because countries were unable to give up this unwilling to give up this taxing right. So to envisage this at the global scale is really the key challenge. Also, as was mentioned in the paper, the policy brief which was circulated, most of the financial exchanges are in the US and the EU, and thus, unless they agree to redistribute these funds, this idea will not generate meaningful revenues. It may be more realistic to start at the idea, demonstrate the technical feasibility, and then question which was circulated with me, which was that what are the most important factors to be considered while devising a common standards framework for country collections. So I would say that if the above mentioned preconditions are achieved, then the common standards framework should be, most importantly, administrable. Administrability should be the overarching design principle, and accordingly, it should include the following. The first component of the common standards framework should be the scope, which is that which transactions will be covered. Practically, it may be more feasible to start small and target the big chunks, so to speak. This is because the complexity of collection goes up with the number of instruments covered. Recommended targets are stocks, bonds, currencies, and derivatives. I would like to point out that the size of the over-the-counter derivatives market as of 2022 is $632 trillion, which is more than 7 times global GDP. So the derivatives market is really very important as a source of revenue for this universal FTT. Further, not every country may have a well-developed financial market. If the idea is to have a common scope, it would help to bring into the tax net financial instruments which have near universal coverage. The second component of the common standards framework should be the taxable person, which is who will pay the tax essentially. Ideally, this could cover both individuals and companies, but to keep it simple and administrable, it can be restricted to companies. The third component is double taxation. There must be a framework through which cross-border double taxation can be alleviated, such as through the exemption or the credit method. The next component is the rate. What will the tax rate be? The rates prescribed in the policy brief of 0.1% on stocks and bonds can be used. However, a far higher rate on derivatives is recommended, at least 1%. Again, to mention, the over-the-counter derivatives market is 632 trillion. So this is really an enormous pool of revenue. Then another question which the proposal should reflect upon and develop further is the coexistence with existing taxes. If a country already has an FTT, then what will happen to that? Is it supposed to give that taxing right up to the global pool? Or would this be on top of that? Practically, it is very unlikely that a country would give up its taxing right to this global pool. Therefore, the proposed FTT would have to be a surcharge which would function on top of existing taxes. Administration-wise, the question is who will collect the tax? Typically, this is enforced through a withholding tax collected by the exchange where the transaction takes place, which then hands it over to the government. So the exchanges would have the main responsibility. And as mentioned, most of the exchanges where the large value of transactions takes place are in the US and Europe, making their agreement to this proposal critical. The next component would be a disbursement to a central pool. When should the money be handed over to the loss and damage fund? Some guidelines are needed on the timelines by when it is expected to happen each year. And the last component of the common standards framework should be accountability to the legislature. Because since this is basically the country collecting money and giving it away, parliaments would want to know how the money was spent. So some periodic reporting mechanism to parliament, including national benefits, if any, must be an essential part of such a system. So thank you. That was my response to the question which was sent to me on what are the most important factors for a common standard framework. Yeah.
Thank you. I mean, these are, I think these are very important factors that we need to take into account. Let me now come to Karin Jancykova. She is the program manager for climate and energy of the Multilateral Development Policy Dialogue at the European Office of Konrad Adenauer Stiftung, based in Brussels. Karin, over to you. Question before you is that there is a lot of clarity needed on specific sources of finance for the loss and damage fund, and unless we have those clarity, the purpose of this fund will not be understood. Do you think that this idea of an universal FTT would help induce some sense of clarity on the one possible source regarding the loss and damage fund, including its governance, etc. Over to you, Karin.
Thank you very much. Please, can you hear me?
Yes, yes.
Perfect. Okay. First of all, thank you for inviting me. And I feel I am kind of the minority of the Global North voices today. But the more I feel responsible for providing you some insights of the Global North perspective on what's going on and on your proposal, which we find very interesting. And actually, personally, I'm very much appreciating your initiative and reading the concept note. I see as its perfect fit to our idea of a global climate alliance, where the climate finance is a key element and a key pillar, which needs to be tackled by governance, and not just by G7 or G20, but as climate change is a global challenge, as already mentioned, we see that it has to happen also on a global level, couple of pressure on other states and each and every individual to understand that global change is something real and it needs to be tackled. But everyone is calling for climate action, but for action you need finance. This is how the system today works. Just to give you some Global North perspective, a couple of days ago, the European Parliament just adopted the Carbon Border Adjustment Mechanism, revised version of it, plus as well the revised version of Emissions Trading Systems Directive, which we know is causing kind of also quite tension and different various reactions coming from the global south, seeing it as additional pressure. On the other hand, EU tries to go and be serious about green transformation and green transition. But on the same time, we understand that there can be one simple solution. There can't be. There needs to be a mixture of solutions which can tackle such a complex thing as a climate change. Just to bring a concrete example, if EU has its Green Deal strategy, in the core is a just transition. It means each and everyone should be involved. And you need really strong incentives, not just for companies or governments, but as well for each individual to feel responsible for what's going on. So if we in the EU now speak about, for example, energy mix, it means to combine centralized and decentralized solutions. The same should be also implemented, in our opinion, on climate finance. So we should speak about a financial mix, call it green finance, climate finance mix. It means there cannot be one simple solution. So your proposal can't be the only one, but can be a great complementary to other solutions which are already in place. As you know, for EU, it's very fancy now to announce different pledges with global south different countries, which is great. On the same time, you still see there are some other mechanisms in place, but on the other hand, what we feel is necessary is really have kind of umbrella, global umbrella, who is bringing all these things and initiatives together and help the countries to understand what's going on, help them to identify and map the solutions and needs, because it's such a complex thing, you cannot tackle it via just one angle. To summarize, not to be too long, for us, it's about combining solutions. It's about someone who is enough charismatic, who is enough strong and vocal to be able to support the countries and implement what's the best for them. And as said, it's complex. And my question is always, who will coordinate this? And our office is now very much involved in this Climate Club, Global Climate Alliance initiatives, where, as said, we feel that if there is any decarbonization pathways need, if there is any global finance need, then it has to happen hand in hand with presenting some really strong incentives. Then you can unlock private investments, and then you can go for this kind of global tax. On the other hand, what I also want to mention is we can see this initiative that it could become one of the strong incentives for states to become, for example, member of such climate clubs. Maybe you heard that the climate club of G7 has been now joined by Indonesia, but still we are a bit lacking this kind of pillar of climate financing. And here we can see, if you are searching for someone who could coordinate, maybe climate club could be the one who can be the umbrella. And concrete example, Germany has a social tax. And me as a taxpayer, I can choose whether my tax goes to support my church or to support Red Cross dealing here and there. If you wanna get money from a taxpayer or a company, you need to really have these strong incentives. So me as a youth, for example, and I hear it from our a network of youth of CAS as well, they are very much into the future and the impact of climate change. So I think me being a taxpayer and have an option to send my money for your initiative and having a good reasons why, having a good selling points in front of my eyes, I think I would be willing to send the money there. So just to say, I think the appetite is there, the momentum is there. If there is a strong public awareness about why and how the money would be spent, and that is used for this loss and damage fund, from Global North, I think there is a huge appetite to do that. Yeah, so that's all I want to say is just go ahead. The more green finance mix we have in place, the better, because as I said, we speak about trillions of dollars here and there. And another point I want to mention is Global North should not be seen as someone who should just be seen as someone who should pay a solidarity. We should see each other more about partnerships, and it's about public, private, civic partnerships. It's about long-term partnerships. It's about trust and about building a common feel of responsibility, what's going on, of course, but also really like spreading awareness and more positive narratives than the negative ones towards Global North. Because for now, Global North sees it more as a tech transfer, knowledge transfer, capacity building. But as I said, it's a systemic challenge, it's a complex challenge, so all should go hand by hand. And I can see such global initiatives like Climate Club or Alliance or your initiative should become an umbrella where you can also come and search for information, for data, for knowledge sharing, and using our today digital tools and also Zoom, you can connect so many people and have different calls. But I don't want to jump from one to another and always repeat myself. I would like that, such messages are simply spread on the kind of same time in a complementary way, and that your voice from Global North is finally heard on the global, from Global South are finally heard on Global North. And I still see some gaps, and your initiative is one, definitely, as you mentioned, who could fill such gap. Is just not to, maybe as already heard today, not to build additional tax, but give the freedom to the governments and states with a strong incentives to decide where they want to put their taxes and money. And the EU is dealing it now in a balanced way. They really try to bring such intensity, like motivation based on funds, saying, if you go for green business, you will get more from us. If you continue to do the way you do, there will be less money coming. So it's combination of regulations, of taxes, but also incentives such as additional funding, awards of showing really like the narratives which are about net zero is net positive. This is all the message coming from Mr. Sinha from India, who is the challenge owner of our Global Climate Alliance initiative. And we really appreciate this kind of voice coming from Global South. And we really underline that the EU is not paying a lot of attention to loss and damage things and adaptation measures still. We are more focused on mitigation in the EU with our Green Deal strategy. But as said, it's global challenge, and the more vocal you will be with what's really happening and bring increased scenarios, the more the global north will listen to, and also private investors. But as I said, incentives is an appetite is the key what I think the EU is listening to. So sorry, I don't want to be too long, and just wanted to quickly throw on you all my thoughts.
Thank you, Karin. Let me now come to our speaker, Suranjali Tandon. She is an assistant professor at the National Institute of Public Finance and Policy. Suranjali, the question before you is that we have already heard so many of challenges. Do you think that these are the challenges, or maybe other challenges to mobilize sustainable finance to deliver actionable outcomes, particularly in LDCs, less developed countries and small island developing states? This is not to say that countries like India, which is developing countries, or Brazil or South Africa, they are excluded from this groupings, because in our case, at least, we know that in India, it's a combination of everything. We are developing, least developed, SIDC, everything taken together. It's a sui generis kind of situation. So over to you, Suranjali, for your thoughts.
Thank you so much. As someone who works on taxation and sustainable finance, this seems like a very interesting conversation to have. I've looked at the history of financial transaction tax in much detail, which will be published soon. And I think my view on it, I won't spend too much time. I will go back to your question, but just a few thoughts to say that, the FTT's ill fate is the product of diverse needs across economies. So if you look back, the Chancellor of UK was absolutely opposed to the FTT at that time, said it's a shot at the heart of London, especially because markets would have moved elsewhere. We've seen similarly, cities and states within the US have opposed it because there's an interest in retaining the volumes of the market. Also, I would say that, there's competition. So more and beyond competition, there's also the need for private finance. So when you say, where can this money come from? We are all talking about private finance being an important filler of the gap. And if that is so, then unfortunately, and even for the tax, we need higher volumes in the financial market. And so therefore, I think the solution that we're looking for is elsewhere. If tax is to solve this problem in any way, I think none of the panelists have mentioned so far is the need for a carbon tax. I think the financial transaction tax was a solution to a problem, which is markets don't behave well, or they tend to be extremely volatile. And the problem that we are solving in the climate space is that there's an externality which for many centuries has not been priced appropriately. So either there should be a cap and trade system wherein you get allowances, and these allowances could be in some ways taxed, or together with a tax on sectors that are emitting today and imposing a cost to the economy. And nothing prohibits economies to do this unilaterally. So even if we take the example of FTT, India has had an experience with its own kind of FTT, which is the securities transaction tax. One has to be mindful that there's only as much that can be raised. So for example, India's collections are approximately or close to about 12,000 crores or more, around about that number. And if you compare that to overall collections from corporate taxes or individual taxes, it's minuscule. So my point being that we have to look at a different form of tax, and perhaps a carbon tax is a better way to look at it. I think the other is what we've already seen. Neha's talked about green bonds. She's talked about, and she's working on frameworks within India. I think one way is to change regulation. It's all about behavioral change. How will finance be directed to sectors that need money? It's by imposing a cost somewhere, and that cost could also be through regulation or by making investors and companies conscious of their actions. So investors could desist on account of behavior which is not compatible with a net zero or a goal that is set in terms of climate change. So I think that those are the few sources. And I would also remind everyone that, when arguing for a universal financial transaction tax and, coordinating, it's important to look at the international experience that we've seen in digital taxes. It's a real teller of our times. Countries don't agree easily. The solution gets more complex. So at the moment, the financial transaction seems very nice and simple. But when all countries sit at the table, there are need for exclusions. There's obviously the question of distribution that all the panelists have raised. And that can be a very irksome issue. It can also distort. So what you might see at the end of it, it may become similar to a loss and damage fund where we don't know what the contributions are, who's going to receive what. And it can centralize the global order again. So you cannot expect international order to look different from what it is today, even if the tax is innovative. So I would say that exploring domestic carbon taxes could be like an interesting way, as well as changing regulations to scale up sustainable finance. Thank you.
Thank you, Suranjali. So broadly, there are three things which I think which are emerging from this discussion. And I would request all of you panelists to tell us about your thoughts on those three things. A, that rather two things, not three. A, that what Professor Gangopadhyay has said, that this is such a complex subject that markets, if we look at everything through the lens of market, or so-called invisible hands of market, we may not be able to go forward much. So what is it that we need to do in order to take the agenda forward? So that's one. Secondly, what Suranjali has just emphasized on, that instead of an FTT, if we can think of domestic carbon tax, while it may sound attractive from operational point of view, from other things, but it may also result in cross-border complications, whereas the issue is very much cross-border. That's what is coming to my mind. I may be wrong. And third is taking all these things together. Since we have taken this as one of our agenda for future, as I said, it's not going to happen overnight. So what would be your suggestions for us for cuts as next steps? So how do we take it forward, or what would be the course corrections that we need to undertake in order to take it forward? So let's hear from Professor Goyal, if she's there. Yes, she's there. Professor Goyal first, then I'll come to others. I mean, don't have to address all these 3 points.
No, I think this discussion has been very useful, and I agree that there's no one solution possible for the issue of climate finance, and we need to have a number of different things going on. The issue of building trust across North and South, and therefore, I'm a little doubtful about this loss and damage fund as the primary beneficiary of any kind of global tax raised, because that focuses on distribution. While it's important to build capacity, and that is why loans and decreasing cost of loans is also very important, and to have a pipeline of projects. Because even if you're going to protect communities, say you need to build sea walls and so on, you should have a good, project pipeline. And mitigation is also continues to be important. We should not give up on the global temperatures, and so you need all kind of initiatives to continue different kinds. So carbon tax is not mutually exclusive to a FTT. And a FTT is very complex because it's domestic financial transactions, all financial transactions. Well, I think a natural extension of the kind of tightening of regulations we saw for banks is to extend some regulations, some taxes, are part of that package of regulation to international transactions. So maybe if we go back to the Tobin tax, which is international financial transactions, because that reduces this volatility issue, which raises costs for emerging markets and affects the cost of climate finance also, right? So it might be better to focus on that, because I believe that technology has changed so that it's much easier to impose such a tax. Many countries, and this Shubhashis issue of we don't know what will be the impact of a tax. So there on the financial sector, the impact of a tax on transactions, for example. But we have seen that STT has been imposed in Indian financial markets. In theory, it's never good to tax an intermediate transaction, but it's easy to do given exchanges and technology. And it's been done without leading to any major reduction in market activity. Yeah? So in the same way, I think that cross-border international financial transaction tax it can be agreed on and is more feasible at the current juncture, and it would give an experience to the globe, to the world on how to proceed. But it's a long-term kind of goal, and in the meantime, a lot of institutional structure has to be built to be able to do this and to coordinate even the distribution. There are formulae which give weight to population, to tax effort, So to keep some accountability there, not just because vulnerability, yes, but also readiness to use the fund in a meaningful way, that accountability to the donors. So all these issues, the infrastructure to deliver on this is also to be built up. And I agree with Mumbi that you can't deny, wait for a big bonanza to come from abroad. You have to start with domestic initiatives and make progress on this, that everyone has to make sacrifices, that individuals in emerging markets have to economize on energy use, that LIFE initiative that we have in Indian T20. So it's not as if this is the only one or the major one, but if it makes some more money available to address really pressing climate issues, and I think the Global North recognizes it's a public good, that we're running out of time, that we need to do something. So to start in a small way and to continue with multiple initiatives, I think is a way to go. Thank you.
Thank you. Thank you, Professor Goyal. Let me come to Professor Gangopadhyay. So after hearing all this, what would be your recommendations to us? How do we take forward these initiatives? What kind of course corrections that we can do? So let's hear your recommendations first.
Well, there are two parts to your initiative. One part is the fund, right, which involves how it is going to be raised, and more importantly, as it was remarked in by many panelists, how is it going to be distributed?
Right.
And the second part is whether the FTT should be the source of that fund.
Yes.
And so let's keep the two separate for the moment. But I'm a firm believer in systems. So in principle, the two can't be separated, right? But we'll come to that in a minute. Let's just talk about the first part, which is collection and distribution. Now you will please excuse me if I appear a bit harsh when I make the next statements.
No.
It's just as a global citizen, I'm making this statement, right?
Yeah.
Maybe I'm wrong, but hopefully I would say I'm wrong. But the distribution is a big issue, and it starts with the collection. As was pointed out, the bulk of the fund, or the bulk of the share of the fund, would go to highly developed financial markets. The global south is not among them. We have seen historically our experiences with the bank, the IMF, has not been very good for the global south.
True.
The UN, Iraq war, now Ukraine war, it has not been very good.
True.
We're now asking for this to be parked with the UN. I don't think it would be very good if we follow the legacy of what has happened.
Right.
So the distribution would be a constant, worry when you're trying to bring these countries together, right? Because they have different histories, different experiences, right? From these same countries who are now coming to the table for an agreement. So, and the first thing that I said about the collection, there will clearly be those who have a larger share of the funds and those who don't. So how is the decision making going to be done? The only organization that I can think of, global organization that I can think of, which was truly democratic, if you take countries as entities, is the WTO, right? No other organization has been able to run like that. And it was not surprising that WTO gained a lot of positives in many ways. But the other organizations sound, quite frankly, deeply suspicious. The second part about the FTT. Now, as I keep saying, there was one, we learn through trial and error, right? So obviously we have to think and try out various things. Some will fail, so we'll try again. Because this is an era of experimentation. We are entering into a realm on which we have no experience, right? So obviously we would be extremely lucky to hit upon the best solution in our very first endeavor. And therefore, I agree with some of the things that were said, especially in the later stages by Janik, I think. Oh, sorry, Karin, by Karin, about, continuing the dialogue, using these clubs, because we need to evolve a solution. That solution is not staring at us. We have to evolve it and then worry about implementation, right? And the two are, sorry, what I meant was the evolution and implementation have to go hand in hand, because if the solution is not implementable, it's not a solution.
Yeah.
So they have to go hand in hand, and therefore we have to experiment. We have to keep the dialogue moving. We should not throw up our hands and say this will not work, therefore let's go back to our own ways. We certainly can't go back to our old ways. So that information has to be clear and loud, that we need to do something.
Right.
And these are those initiatives that you are taking. I would also say that what Suranjali said, exactly like what Neha said, there are experiments happening, because what the government is doing in India, right, is also, in fact, CBAM. And these are all collective actions that are being taken. We may not agree with some. There are a lot of criticisms about the CBAM, and it will be coming out as it starts, right, I'm sure. But the thing is that these are the experimentations that we have to do, right, to get there. Now, of course, the CBAM experiment has nothing to do with fundraising. Whereas the thing that Neha was talking about has to do with fundraising. Right? So that's a closer experiment to follow. Things like that we have to keep doing. And the important thing, nothing succeeds like success. If, for example, the fundraising and its use by India is successful, we will win over a lot more friends than through dialogue. Right? So in that sense, I think, we should push for these good, because this is like a pilot that we're doing within the country. Let's see how this works. And if it is successful, other countries will start following. And when each country has its funds, right, general purpose rules can be made. So that this difference among different countries or at different stages of thought, process, type of economy, the type of activities within the economy, we're all in different stages, right? It's very difficult for me to see the benefit of what you are saying, and for you to be, confident that what I'm saying will happen in your economy too. So we have to be able to overcome that. And the best way is for countries to do their own experimentation, and the successes will show. Failures will be weeded out.
Thank you. I agree with you that all these experiments which are going on, We need to look at them more carefully. We need to start somewhere. The only thing that is that while it is important to have experimentation, but a priori you may not know that who would be the winners, who would be the losers, whether it's going to be a zero-sum game, who would be at the receiving end. We often see that developing countries or like us or poor countries like us, low income countries like us, we always at the receiving end. So we need to see all these things while taking forward this agenda. So let me come to Neha, Mumbi, Abdul, and Suranjali. Then finally I'll come to Karin because I have some ideas to see what is her take on those ideas. So Neha, after hearing all this, what
Yes.
is your suggestion?
Yes. So first of all, it has been a very enriching discussion because there are diverse views, as there should be, and are naturally there would be. I do have a couple of observations, and especially on the question of carbon tax, and this is something that Suranjali and I debate quite a lot about. But beginning from the beginning, which was about the universality aspect of it. And I do think that the very nature, whether that's a FTT or a carbon tax, I think the principle of universality is a non-starter, at least to my understanding, because it does two things, and we have talked about it, besides the sovereignty aspect, that it does not take into account the context-sensitive policy approach, and it also does not really reflect the political reality. So, and if you go that way, which is sort of, screening out these very complex matters, you will not get anywhere. So I think the universal aspect of it is a much more is a very big challenge. Now, coming to what Suranjali was suggesting, that why don't we start domestically and why don't we start with a thematic tax, which is carbon tax. I think I will echo what Shubhashis mentioned earlier. I would like to look at it from the point of view, from the prism of equity and welfare impact. And I think that it is debatable when you start looking at it from that impact, because it is going to hurt the poorer people more. Now, most of the time, in terms of impact, a carbon tax turns out to be regressive. But even if it was progressive, because of the rise in prices, when let's take if it is not explicit carbon tax, but our fuel prices, when they're maintained at a very high level, this is the kind of carbon tax, right? But you and I who use cars and go to the malls never stop using cars and going to the malls. The price rise on different commodities, which actually happens as an effect of that tax, actually hurts the consumption basket of poor people. So who pays, who consumes, and in that sense, that redistributive aspect, that I'll come to later. But the impact of such taxes, or if you were to look at it from the welfare point of view, I think it is debatable, and for that reason, I don't quite understand. I think carbon tax, the way it is sort of propounded as one big panacea, I do not agree with that. Then the other thing is that imposing tax by itself is a pretty politically, sensitive thing to do. So better ways would be, say, non-price measures, for example, standards, regulation, which Suranjali also talked about, that may be able to have a greater behavioral change if you're looking for that, rather than get into something which is so visible, which is so visibly taxing on citizens, and like a carbon tax. And then I think I will conclude my remarks by saying that you have to, the main question that we are dealing with is, where is the capital going to come from? How you will augment the sources of capital. For that, you need to make financing cheaper. going back to what Ashima has been saying, and that they're the innovative instruments, like, for example, the thematic bonds that I was talking about, the green bonds, etc. And where the governments can take much bigger action by issuing sovereign green bonds. I think even for emerging economies, it's going to be an experiment which will not, which has less sort of challenges, and more so in domestic currency and onshore. Again, that is the point that I keep making, because you can then, as a government, raise money through the market. We had very good experience with our own Indian issuance. Despite all the conditions of high interest rate, etc., international investors also participated in it. Yes, and we did introduce certain regulations just ahead of the issuance, so that was required. What I learned from this experience is you give a little bit of regulatory support, you give a little bit of incentives, and your domestic market starts to, come up. And I think that momentum that domestically some emerging economies can do, especially using these innovative instruments, can have a great effect in mobilizing capital and deploying capital, whether through then you raise it from the market, but you are a government, you're a sovereign, you can give it as relief to something. You can put it in adaptation measures which have long which don't really monetize themselves in very short periods of time. So there are very many uses that debt can be used as a fiscal policy tool by sovereigns. And the another important and interesting thing is, because of the transparency, it introduces fiscal discipline. You know what it is being spent on. Now, tax you collect, and you do not know what it is getting spent on. If it gets taken as a GST compensation, which has happened, then you are basically then circling in a sort of you're not coming out with solutions that can really work in the shorter time and at the scale that we need.
Thank you. So let's hear from Mumbi, Abdul,
Thank you.
Suranjali first on possible way forward.
Wow, I think there's a lot going on in my mind, but what also stood out from what Neha has said is, how can we mobilize different forms of finance? And what I've seen here, also working well, is pushing national banks to get GCF accreditation. So we've issued a green bond, and that also has worked out quite well. So I think it is looking at these things, for lack of a better word, as opportunities, but it is difficult because not all of them have a clear business case, as has been discussed. And I think that's also present in some of the ideas being shared here. I think it is finding, how do we then collaborate to mobilize? I think that's what we need to ask, as coming from this global south, global north. How then, what do we do? So if it is now very practically, so if it is not this transactions tax, how else do we then work together to put capital towards, again, decarbonization efforts, and then to address very real challenges we have, because we are very vulnerable to climate change and we're the least responsible for it. And then I think, just to bring it now back to us, now I'll talk for African countries, we're not the best at transparency. So some of the problems, in fact, when I was discussing this with one of my friends, he said, okay, even if you have that and it comes here, now what? Because the moment it gets into our coffers, it may not be directed where it should. So we therefore then need to ask ourselves critically in our context, which sometimes are quite difficult to navigate. Sometimes it is, political will is not unified. How do we then again boost that? So it's a thinking point of that. What does transparency look like? And there are ways of doing this. Okay, so I'll leave it there, but thank you so much for the
Thank you.
insights.
You have raised this very important point that suppose everything is in place, the countries have got funding.
Yeah.
How is it going to be used? I mean, that's a big question, and we have enough examples, several, many examples of misuse of such funds. So let me now come to Muheet, Abdul, and then Suranjali before I come to Karin. Abdul?
Yes, thank you, Bipul. That's been a very interesting discussion indeed. I would like to start with the principle of common but differentiated responsibility under which the global north and the developed countries have a very clear responsibility of redistributing revenues to the global south. And the evidence so far is that under the Paris Agreement commitment of giving $100 billion every year to developing countries, they have never achieved that even once. The maximum they reached, I think, was around 83 or $84 billion per year. So the reputation which the global north has earned for itself for lack of reliability in this regard is quite well deserved, I would say. And developing countries should keep this firmly in their mind as going forward. Now, with this basis, the likelihood that the US and European Union would collect money from their stock exchanges through the financial transactions tax, hand it over to UNEP, and then have that redistributed to other countries is extremely low. And this is something which we should take as a basic assumption. With that understanding, what is a more practical, politically practical way forward, in my assessment, is that developing countries on their own initiate such a universal financial transactions tax. There are many developing countries within the G20 who don't have such a tax initiated, and India could work with them to proceed with initiating such a tax, and they could keep it with themselves, because if they hand it over to UNEP, then practically it may actually delay them getting that money back because of bureaucratic delays and so on, and political difficulties in actually getting the projects approved. So as a way forward, developing countries could initiate the financial transactions tax on their own, keep the money with themselves. If the developed countries agree to transfer the money to the loss and damage fund under the UNEP, then developing countries could consider making that transfer to the loss and damage fund, but not before the developed countries agree to do it on their own. This is also in the interest of developing countries because, as mentioned, the financial transactions tax can curb market volatility. In many of our stock markets, we see that the developed countries have very speculative sort of investment. They see that the prospects look good, they put money, the moment there's some problem, the money comes out. And this really creates havoc with our currencies, with our balance of payments. So accordingly, it is in our interest to push for this tax, because then the money which would come in would be more serious money, so to speak, so that it would not run away so easily when there is a problem, which happens quite often in developing countries. So this is what I would recommend as one possible way forward. I would also put before your consideration one more idea, which we had published by one of the authors at the South Center. An external author had published it with the South Center. This is the climate finance withholding mechanism. So you can find this policy brief on our website. And the basic idea is that withholding taxes can be levied on multinational companies headquartered in developed countries. And that money can be kept towards adjusted for the climate finance obligation of 100 billion, which is supposed to come to developing countries. So instead of the money going from the multinational to the developed country, paying tax, and that money coming back as part of the 100 billion, this is withheld at source and adjusted towards the 100 billion, which is supposed to come to developing countries anyway. So these are some comments from my side.
Thank you.
It's been a very interesting discussion.
Very interesting proposals. There are several interesting proposals which you have gathered from this webinar. Let us see how we can first absorb them, and then what could be the possible way of taking them forward. So let's hear from Suranjali, then I will come to Karin. Suranjali.
Thank you, Bipul. I think I'll circle back to my suggestion, which, Neha's raised very valid points about equity concerns of a carbon tax. And I think there's been experience where carbon dividends can be paid from the taxes collected at the lower deciles. On the evidence of it being regressive, I think the jury is still out there for countries like India, where we see that fuel consumption is absolutely concentrated at the upper deciles. I think one other reason why countries within the G20 need to talk about this is that the carbon border adjustment mechanism is going to come in place soon. What it will do is it's going to be imposed on the exports from developing countries. And I think it's a good time to talk about it and negotiate where the current taxes, so we're already paying taxes on fuels, right? It's just a change of nomenclature and telling the EU and the US that, look, we're already doing this. There should be recognition within the international trading system of such taxes. So it's not like countries like India do not have a carbon tax. I think the other benefit of calling it a carbon tax is that there's a cess element to it. So when you name a tax against the base, there's also the obligation of appropriating it for the use of such purpose. I also mentioned that, within the pricing mechanism, it's not just a tax, it's also a cap and trade system. What we've seen as evidence across the world is top listed companies have begun to respond to these cap and trades and have internally started pricing their own carbon emission, which is like sort of saying, putting aside money as cost from their operations and investing towards low carbon transition. And if you're saying that all of this, trillions of dollars that are estimated as annual outgo or requirement on account of climate finance is to be achieved and public finances are not available, countries are under extreme debt stress, it has to be companies that have to make a change. And I think their pricing strategies are absolutely important, because at the end of the day, the externalities are attributable to these corporations. I think the dialogue on this needs to be had, and perhaps Kat can take this forward. Thank you.
Thank you. So on that positive note, let me come to Karin. I was about to say this. That look, this is not one of kind of webinar. It has to be a long-term agenda that we need to pursue, and we have to have various views and to see to it that how we can have how we can gather those views and take them forward in a balanced manner. So there, I think this initiative by Mr. Sinha, and you are now a senior coordinator of this initiative, Global Climate Alliance. I think you have a huge role to play to bridge various ideas, get people on board under one platform, get different views into a civilized debate. And we'll be more than happy to work with you, Karin, to take this agenda forward. It's not that we won't be working with others. We are open to various networks, alliances to take forward this agenda, because at the end of the day, it's going to affect, it is already affecting us. But the main message that I'm getting from this webinar, that there is no one solution or one size fits all kind of a solution. So we have to see to it that what are the different solutions and how we can fit those solutions under specific circumstances. So let's hear your thoughts, Karin, on that note, and then we'll come to an end. Over to you, Karin.
Thank you. And actually, you pretty well summarized what I wanted to say today at the final. And as said, there is not one simple solution. The complexity needs a complex approach. It needs someone who is the challenge owner. And it needs also to common understanding that, that we need to be all on board and that there is differentiated approach needed. So each country has its individual needs. And therefore, the Global Climate Alliance focuses also on support to member states with modeling exercises, with sectoral approach to unlock the private investments, to bring around one table from the very first beginning, the key players, being it investors, policymakers, decision makers, being it startups, being it youth. And now I speak as a typical EU citizen because the feed we get daily here in our Brussels bubble is about being inclusive and about more completion than competition. And on the same time, as I'm one of the co-organizers of sectoral workshops, for example, now the EU-India dialogue on green steel, I understand that there is even not common understanding of what green steel means. So how you want to unlock private investments coming from global north to global south, if we have different understanding of what green steel means, then you have a CBAM, as already today mentioned. For some, it's a carrot, for others, stakes. For global south, it's a stake. For global north, it's a carrot, because it actually supports the local EU markets. But on the other hand, I really don't like this this traditional view on things. We should not see it linear, and I see it all circular. We also speak a lot about circular economy and just transition. Circular means that we understand that if we invest somewhere, we still expect some benefits. But as said, we need to differentiate. Climate change is something what should be integral part of each and every investment we do today. So I feel today we speak about climate finance, about different additional taxes, about different mechanisms, but we need to use existing mechanisms and reform them from inside. We need to change our mindsets. We really need to understand that we cannot think in the same way we thought today, because the damage caused to our planet by our acting, especially in the global north, is really huge. And yes, we are responsible as a global north for what is happening. You are the ones suffering, having this extra events, climate events happening, being it floods or drought. And I fully agree with you that the global north is responsible for this as a key emitters. Of course, India, China, they are also emitting as well. But on the other hand, we are all on the same planet, and this should be in the loop, key loop. So I don't want to say here very strong messages. I just think that your initiative is very important. It needs to more focus on the implementation phase and how to integrate it in other global efforts. But as said, we are talking, we are pledging, we are bringing here and there different amounts of money. What I'm calling for, and as a representative of our multinational development policy dialogue and as a coordinator of Global Climate Alliance, is really building an umbrella platforms which really focus and pay attention and make effort of mapping and helping the countries to understand that there is a need for a systemic approach, because otherwise we will fail. So it's not about simple solution. It's not about project by project, but all the projects needs to be kind of connected. And we have today so many tools like a Zoom, where you can connect 200, 300 people together, experts, being it economists, being it, startups, and together find solutions, build partnerships, network. So on this, I can see that even your initiative can find an integral part also in the Global Climate Club, or call it Alliance, because climate finance is key and there is lack of money and everybody knows it. But if we will bring this climate finance mix together, and we will clearly communicate and map where is the gap, what is already in place, not to duplicate the initiatives, then I think we could really find a good solution for climate financing in the future. Thank you.
Thank you. So on that note, let me thank, I think we are right on time, unless any of you have anything very specific, very important point, which is very relevant to this discourse, but may not have come so far. And if you can make that very briefly, couple of minutes, anybody. Otherwise, I'll call it a day. I mean, it's a long day, Friday evening, and wish you happy weekend. So anybody, if you want to make any final point, I can extend it by a couple of minutes. Don't think so.
Maybe we
Yes,
should turn on. Maybe we should turn on our videos so that the faces that I haven't seen, I can see.
Okay. That's an individual choice.
But it didn't work. It didn't work.
There is a dialogue and interaction.
That's not a collective choice. That's an individual choice. So,
No. Karin talked about Zoom. We are on Zoom. People are not showing themselves.
But Bipul, it was a fantastic discussion, lot to learn, lot to discuss. And I think there are definitely those bright points, some ideas did come through, even for, I think, each one of us to reflect upon. From the point of view of emerging economies and also domestic steps that can be taken forward. So thank you so much for calling this rather large group. But thanks a lot.
You. So what we're going to do, we're going to first note down what you have said, not exactly in the form of proceedings, but more in terms of issues. I'm sure that there will be more questions than solutions at the moment, than answers to those questions at the moment. But at least there's a beginning. And as I said, this is a long-term agenda. We are not going to be successful unless we pursue this agenda, and we have to see that how we can make incremental progress. At the end of the day, I mean, as Karin said, that all of us are in the same planet. And on that note, tomorrow being the Earth Day, I don't know. I mean, such days are more ceremonial, so I'm not very keen on such things. But we're really thankful to all of you that you have agreed to come to this platform, and this is just the beginning. I mean, it's always a small set of people who start making things change, and there are enough examples of that. So on that note, let me thank you, and good evening, or sorry, good night to most of you. Good evening to some, and wish you a very happy weekend. Thank you. Bye-bye.
Thank you.
Bipul, we are looking forward to your leadership in the next steps that we take.
Yes, sir. I'll come and meet you.
Sure.
Long time we haven't met.
Bye.
Okay.
Bye.
Bye. Thank you.
Thank my colleagues.
Thank you.
Who have made this possible, particularly Jayesh Mathur, Ritu Sharma, and Vandana Sharma. They have taken the lead in organizing this thing. Yeah.
Great job.
You.
Great job.
Bye-bye. Bye-bye.
Bye.